What is up? This is the Working Investor. In this video, we are going to talk about QLDY, and we're going to evaluate the put spreads that I found, and we're going to try to see if they blew through the spreads. We're also going to evaluate very carefully QLDY versus QQQ versus TDAQ versus QQQY versus GPIQ in the past few days since it launched, how it's performing. We'll take a peek at Defiance's old fund, QQQY, to see if that thing ever did anything for briefly. And we'll talk about the Tapp Alpha 2 times per month paycheck that somebody could set up with their TSPY and TDAQ position. As always, nothing here is financial, tax, legal advice, or any sort of advice. This is purely for fun and entertainment purposes only. Let's get into the video. So unfortunately, on the website QLDY, if you're looking for the intraday trades, you cannot find it. Because look, I'm going to go scroll down over here, and they have some, you can see the holding, you can see NDX, that's their long position that they have. Because remember, this fund has two components. They have long exposure to the NDX, which is the NASDAQ, deep in the money, because the NDX is trading at 24,503. So this one is 1,001. So this is deep in the money, long exposure. And then you see this is 92.58% of the portfolio. The rest of the portfolio, I would imagine, they have treasury and cash positions, is the spreads, but there is no spreads. So let me show you where you guys could find the intraday trades. Shout out to Max Convexity for pointing this out to me. So all you got to do is just go to their other funds, even QQQY, and you're not looking for QQQY per se, but if you go down, they have here, you see over here, intraday trades. If you push that button, it'll pop it up for you. So let's go ahead and take a look at the trades. So I pulled up the spreadsheet from today, 9/24/2025. You can see all their different funds, but here you see QLDY. I made it nice and colorful so you guys could see it. Now there are two positions on QLDY. So you see here, you see where it says there's a P in there for put. And I bolded and underlined that it's the 24,670 and sell. So they sold a put. So green means they, made money. And that's one side of the spread. And then you have the bottom one, which is the 24,540. And you could see the price at the end of the day is 24,503. That means it went below 24,670. So it went below the short put, and it also went below the 24,540, the long put. So this thing blew right through the entire spread. So this spread was a 130 point wide spread, and I looked it up. So it's for each contract. I don't see how many contracts they did, but for each contracts, you have to multiply it by 100. So 100 times 130 is $13,000. So they lost $13,000 per contract, but they received some premium to offset that. Let's take a look at the net premium. So if you look to the right, you could see they've collected $83.90 per contract, and you have to and then they paid $27.50 to buy the long put. So the net, they've received $56.4. So $13,000 loss, but if you offset the loss by 56.4, but that's remember you have to multiply by 100 when you do contracts. So the net is a loss of $7,360 for today per contract they put on. That's what it looks like. Just to refresh your memory, when you have a put, the risk you take with a put credit spread is that, let's say you have a 2% wide put credit spread, and the market is down 3%, and they're writing the spreads at the money. They write the short spread at the money, right? So there's no breathing room. So even though the market is down, let's say, for example, 3%, but a person who has a put spread would be down 5%, because 3% down plus the 2% extra down loss from the spread gives you a 5% loss. But of course, you have to also add some credit that you receive from the spread to offset the loss. Let's say you got 1% of it in credit. So let's say you'd be down like 4%. So the market's down 3%, you're down 4%. That's the downside of put credit spreads. But of course, if the market would not go past the spreads, or if the market would go up in price and wouldn't even challenge the spreads at all, then you would be capturing the entire upside of the market, plus you'd get the, whatever premium you've received from the put spread. So it's good and bad. Like I say, it looks like they're running it about at the money, but I would really prefer if they wrote them a little further out of the money. But that's how they're the boss. That's how they do their trades, or we are the boss because we are investing in them. So we have a say what we do. But so far, I'm not liking what I see. Let's go ahead and take a look at September 23rd trades. So here's the spreadsheet that they give you. I just added just the colors and added the price of the NDX for the day at the end of the day. So at the end of the day on September 23rd, NDX was 24,580. Okay, and you see the red is the I kind of changed the colors a little bit, but yeah, they sold the 24,770 and they bought the 24,650. But you see that it went below the 650, it went to 580. So again, it blew through the entire spread. This was a 120 point spread, but they received $36.34 in credit. So 120 point Y times 100, it's a $12,000 loss. Offset the loss by 36.34 times 100, because you have to multiply 100. So they had a net loss of $8,366. Additional net loss from the option premium per contract that they put on the 23rd. This is my analysis, because I'm looking at what they're doing and I'm looking at the price and I'm coming to my conclusions. If I'm wrong, you can let me. Let's go ahead and see how QLDY from Defiance is comparing to QQQ versus TDAQ, which is the Tapp Alpha NASDAQ, versus QQQY from NEOS versus GPIQ from Goldman Sachs. And we're talking about a very short time period from the 18th to the 24th, so a very short time period. And who's on top? So currently, it looks like QLDY in a total return standpoint is 0.84%, beating the Qs at 0.6, beating TDAQ by 0.56, beating GPIQ by 0.38, and beating QQQY at 0.31. So it seems like whatever it's doing, I guess, it did lose a little bit more, but I don't know, whatever it's doing, it seems like it's so far beating everybody. But again, this is an extremely tiny timeline. I want to talk about when the first payment of QLDY is coming out, because a lot of people have been asking me that. I don't have any special information. I just look at their website, and it says over here on the website, it looks like the next pay date is going to be 10/2/2025, and the one after that is going to be 10/6/2025. I believe the October 2nd, I believe it's a Monday, and October 6th is a Thursday. I got it wrong. I think October 2nd is a Thursday and October 6th is a Monday. But the point is, it looks like they're paying Monday and Thursday, and it's going to start on October 2nd. That's what the website says. So if anybody wants to ask me, just look at the website. It's right there in front of you. If you want to know more about QLDY, I made a video on it. I'll post it in my description. I also want to talk about, I've also made a video on TDAQ, which I'll also post. But let's take a look at these bi-weekly stuff. So Tapp Alpha is a fund that they have two funds in their suite. They have TSPY, which is a 0 day to expiration S&P 500 ETF that pays once a month, and they have TDAQ, which is a new 0 day to expiration NASDAQ 100 ETF that pays once a month. And he tries his best to, strategically put on the calls at opportune times. And then the funny thing is that they stagger the payments. So instead of jumping on the website back and forth, and you can look at the website if I'm wrong, you can double check me, but Tapp Alpha, you can get 24 payments a year by owning these two funds, which I do right now, currently, to full disclaimer. So TSPY, you'll see here, pays Wednesday, October 8th, 2025, And then TDAQ will have its first payment Wednesday, October 22nd, 2 Wednesdays later, 2025. And then TSPY again, November 5th. And so it looks like every other Wednesday. I would like to say it's bi-weekly, so there's 26 payments a year. But I don't think that's the case because they pay monthly. So I would presume, I don't know if I'm right or not, that maybe it's 24 payments a year. But at least 24 payments a year, it looks like. 2 payments a month, one from TSPY, and then a couple weeks later in the month from TDAQ. So that's just fun to, notice. One of my people from Discord pointed it out to me. I do have a completely free Discord. Nobody will ever try to spam you or try to market anything to you or ask you for money. If they do, please report it. It's completely a spam. Lastly, we'll take a peek at QQQY again. I've made some videos on it. I mean, this was one of the first weekly payer. Well, they became a weekly payer. I think Roundhill was the first weekly payer. But they basically, in my opinion, just my humble opinion, I think that this fund or these suite of funds they have give them a bad rap because they have a lot of NAV erosion. And also the total return. Let me show you how horrible the total return is compared to the competitors out there. So look at Defiance's QQQY, which they do, I think, in the money puts. I think I saw they're doing some changes in the prospectus. You have to go take a look at it. But then compared to the benchmark of QQQQ, oh, I should really do QDT. Give me 1 second. So QQQY versus QDTE from Roundhill versus the Qs as the benchmark versus QQQY from Neos versus GPIQ from Goldman Sachs. A lot of Qs over here. Let's just do total return year over year. Look at QQQY, 11.59% total return. Compare that to Roundhill's NASDAQ 100 ETF from just about a year. 19.23%, beating it big time, out of the ballpark. The benchmark of QQQ, 23.38%, doing better than Roundhill and doing better than Defiance. Look at QQQI from Neos, 20.33%, very close to the return of the Qs. GPIQ, the best total return from these income funds, 21.56. So look at the bottom of the pack, like bottom by a mile. The QQQY pretty much gave you half the total return of the NASDAQ 100. So like people, it's not the NAV erosion. That's one horrible thing, but it's the total return which really, really, really lags with this strategy. And I believe this is what gives Defiance a bad reputation. In the community, the people that I talk to, this is what they look at. Some people love it. And, hey, listen, all the power to you. Hey, 12.5% total return is not bad. But compare that to the Qs, and I find the Qs doing a lot better than that, in my opinion. Anyways, I hope you guys enjoy. Have a wonderful working week. This is the Working Investor over and out. Be well.